Thank you for watching Junior Mining Talks. My name is Antonio, and there's a new resource focused fund that was launched last week. So, Luke Haven and I have invited Kai Hoffman to talk about it. Kai, thank you so much for sitting down with us today.
Yeah, thanks for having me. Appreciate the invite. It's good to see you.
Pleasure is all mine, of course. And it's good to see you as well, Luke. I don't know if it's good to see you or not. I feel like I see you too much, but I'm always happy to see you.
Okay, thank
And
you. Bye-bye.
Before we start getting into the actual conversation here, though, I would like to warn everyone listening and watching that we have not received monetary compensation for the production of this video from anybody. However, you still need to understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research. Research is conducted by reading official company filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, neither is Luke. So before continuing on, please do talk to an investment advisor with a good long-term track record because your capital is at risk. And we are neither licensed financial advisors, nor do I personally have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers that I just showed on your screen, please go to the last section of this video and do not consume this content unless you fully understand and agreed with everything said herein. That all said, I've low-key started to doubt your sanity, though, Kai, because you're launching a junior mining focused fund when gold is running, but the juniors are not responding. And obviously, mining is a dying industry, right? We don't need any more metals. We've sold that part. So I don't know what you're doing, but why, though? Why start a fund in a high-risk industry where, failure is the norm, should be the expectation, all these things, and everything with the macro going on? Why start a fund? Why now?
Excellent question. A thing I've been wondering myself a little bit, but it's a natural evolution as well. What do you do as a person when you're in the mining space? And a fund is a logical next step for me personally. And unfortunately, I was approached by a good friend of mine, Manuel Paiva. You used to be part of an asset management firm here just outside of Frankfurt, and he wanted to go independent and asked me, Kai, do you want to join me and maybe help us, focus more on resources? And I was like, yeah, that makes a lot of sense. The timing is right. As you said, gold is running, but the stocks haven't really moved yet. A lot of the producers, developers, yes, we can agree, like have moved up. So I wouldn't say substantially yet. Yes, GDX is up about 40%. Year to date, gold is up over 20% year to date. So it's outperforming 2 to 1, but nothing we've seen it in the junior space. And I think the timing is right. And also, I think we have 2, 3 years ahead of us where gains can be substantial. So timing could work out really, really well in that regard. And then, as you said, like jokingly, but we will need mining in the future. It can't all just be recycled. So it's not an altruistic statement here. It's like I'm not trying to save the world with our resource fund. We're trying to benefit from the cycle, hopefully generate a serious returns for our investors here, and just have fun in the mining space because it's underserved in Europe in particular. Top of my head, I can mention probably 5 resource funds that are focused on mining, like proper resource funds that are focused on mining, and asset management firms even fewer, I'd say. So it's an opportunity. My partner is from Belgium originally. The company itself is set up in Germany, but even the Belgian market is underserved in terms of funds. That's where we see an opportunity just to give more access to this space, and we're seeing it already. Just the inbound since we've announced it is quite interesting. People are reaching out, just curious what we're doing, and I think we're hitting a bit of the sweet spot here.
Why you though? And you're mentioning a couple of things that we'll talk about. That I made notes to talk to you about, but why you? And I understand you've got a partner. I know Emmanuel as well. He seems like a smart guy, but what makes you two qualified to run other people's money?
Very fair question. It really comes down to experience, quite honestly, in the mining space and knowing who the players are, right? Who's really behind the deals. It doesn't really make a difference for the investor in general when we look at a Barrick or a Newmont. We don't really have close ties to them, but it makes sense in the junior and mid cap game. and in that space. We know what is happening. We're fairly close. I've been in the industry since 2008, 2009. So what is it now? 16 years, doing a lot of site visits. I think the network to people in the industry is really well established as well. So we even if we don't know something, we know who to call and who to ask about what is going on, why is this happening, and is this a good story or not, and really just validate certain aspects. I've noticed like doing roadshows and other things in Germany or into the German market that a lot of investors are in the industry, but they're not in the industry. And that's hugely frustrating me to a degree because they're being fleeced. Let's be honest. A lot of companies are coming through here, marketing the best story, the best management team, the hottest asset. But then people don't know who's really pulling the strings, or they're not paying attention to what they should be paying attention to because they do it haphazardly, or they've only seen the company for 30 minutes during a roadshow. And I think that's where we come in. That's where the expertise comes in. Manuel has been investing in resource stocks for a long time as well. I've been working with resource companies for the last 15 years, taken thousands of meetings with them, done a ton of roadshows. And I think that's where the quality comes from, and that's why I pretend to be the qualified one here.
Yeah, you have been in public domain quite a lot, so I think many people know you, but maybe tell a bit more about Manuel. What did he do? Did he invest in mining and in junior mining specifically, or?
Yeah, so he used to work at a asset management firm just outside of Frankfurt here in Dreieich, investing in resource stocks personally, but also professionally. They run a gold fund as well, more on the physical side. But he's been in this space, and his investors have been really keen on investing in mining as well. He's also a director of Cartier Resources, so he's directly involved in the mining space. He sees what's going on from behind the curtain as well, so he understands how the business works. Right, Manuel comes with that asset management background, as I said. So part of his job, of course, is going to take care of the regulatory and the compliance side as well. Because I told him, Manuel, happy to join, but I want nothing to do with the compliance stuff unless I really have to touch it. Of course, we'll definitely play by the book here and by the rules, but. That's it. That's his department, and but he's been doing it for almost 15 years as well. Gold investing, silver investing, and mining stock investing. Yeah.
I thought you were going to say that you want nothing to do with the compliances and you're going to follow no rules. You're just going to go
Oh,
out there and do whatever.
I purely trade on insider information. That's how I do my daily investment and investing here anyway. So,
I hope people understand sarcasm. Otherwise, I'll come visit you. Don't worry. But what I'm thinking about here, you say so Manuel's an insider of a company. You run a service business yourself. So I'm thinking about potential conflicts of interest here. And so again, you run a service business. Are you going to keep doing that? And if you are, how do you manage the potential conflict of interest that might arise from, on the one hand, giving issuers money essentially from the fund versus on the other hand, you're asking them for money. How do you essentially protect your investors from yourself and your own biases?
Oh, absolutely. No, it's a tricky question. And it's not as easy to answer, quite honestly. We run a conference where our goal is to have up to 40 companies there, but the fund itself can only invest in like 20 junior companies. Let's be realistic. Depending on the fund size, we will have 50% roughly will be majors, royalty companies, bigger producers that we don't work with on the service side, to be honest. So they fall off. What we focus on is at SOAR Financial. It's the smaller end of the market, the lower, I wouldn't say the lower quality end, but the smaller end of the market in terms of market caps, maybe around $1 billion and below that. And of those companies, we can only have a small amount in the fund themselves. We can invest in anything, quite honestly, size-wise, even liquidity-wise. But that's where the first line I think we can draw. So the pool shrinks quite a bit. I actually ran into that problem that you mentioned, the compliance problem. I signed up for the European Gold Forum and signed up as an investor, but I really only attended with the intention of vetting potential investments for the fund, meeting with some of the bigger companies, and some of the companies just didn't fit, right? So the question is like, do the companies understand that I said no to a meeting because I have a mandate as a fund investor or as the PR guy? Right, and I don't want to hear flat, or I'm struggling. Or it'll be interesting once we're fully live here, whether the companies understand that a no on the fund side doesn't mean a no on the PR side, because there's a very clear distinction, right? Not every company fits the fund profile, and not every company might fit the PR profile as well. So that's it's an interesting challenge that I'm looking forward to a degree, but I'm hoping companies are smart enough to figure out the difference here.
And from the investor point of view, is Manuel contributing investors, or are you basically starting from scratch, really?
No, so that's a one thing. Like he's bringing in his existing client base.
Hmm.
So we are starting with X amount of euros, the asset management firm, and then the fund on top of that as well. So we're not starting from scratch. And based on some of the peers in our space here in Europe, including Switzerland, we're not going to be the smallest fund either. That is going to launch, which is quite interesting, and I'm looking forward to that. And it makes it a little easier because I told him I don't want to be like a salesman running from town to town trying to hustle investors for money. It makes it a lot easier to start from an established base. I probably would have said no without that base, quite honestly, and Manuel knows that as well. Because that is, I don't know, maybe too much of an ask at
Hmm.
first. So we're starting from a solid base, investors that know the mining space, that know what to expect, and want us to actively manage their money in that regard with through our products.
Yeah, I think that's a big thing, right? I mean, people need to know what sort of risky business they get into, and if you have been investing in this business for a while through a fund, at least you know. But are you seeking new investors, or is this really what you want to start with at first?
Yes, we are seeking, of course, new investors. The plan is to grow the asset management firm and then the fund as well. That's not a secret. We will be attending conferences. Even here in Germany, they're more geared towards fund investors in general. We will be stepping up the social media presence, all within compliance. Deutsche Goldmesse, that's where sort of our products come in as well from a SOR financial side, quite honestly. We'll be using SOR financially. We'll be using the Deutsche Goldmesse sort of as a platform to present Kammervest, that's the name of the asset management firm, strategically to the right audience as well. And we will be visible out there, right? And we do want to grow. I think there's limits to growth, especially for the fund side. I don't want to run a 200 million euro resource fund because if you translate it into Canadian dollars, that's like 320 million euros Canadian dollars. That's when it gets a little abstract and we become a second GDXJ here. And I'm not too interested in that.
Well, what are you interested in terms of size? That's what I was going to ask you. Say, you come with with an X amount of money on the table. Is that something you're going to openly share as to how big the fund is now and how big do you want it to get?
So we're just transferring funds into the asset management firm. So we officially launched only last week, right? So we're just transferring funds in. I don't have an exact number yet what the AUM is going to be. I have a target. It's in the low millions, right? Double digital millions. So no problem there. The fund will be sort of part of that moving forward. And of course, we do want to grow it. We have a plan for the next 3 years. Depends on the markets. Depends on what we can generate in terms of performance. It's tough to give out that target number, but we want to grow it, obviously,
Mm.
and we want to make an impact.
Is it what are you going to do in terms of how are you going to make money? I assume a fee structure 2 and 20, or what are you thinking?
Yeah, we're just setting that up for the fund as well. So I think it's 115. Don't quote me exactly on that. We're just in the final stages of finalizing that with our banking partner. The final fee structure and all that. It might change a little bit here and there. We don't want to be the cheapest fund out there, but we don't want to be the most expensive either. I think the mining fund, and it comes down to expertise as well. You have to invest to stay on top of things, meaning you have to travel to conferences, you have to do site visits. Once I show up as an investor, not as a social media influencer or even a PR guy, I got to pay for my own flights. So I think if the investor expects certain returns and knowledge about the space that we're investing in, we cannot be the cheapest and we cannot put out a discount product. But I don't want to be the most expensive either because the highest fees bring the highest expectations as well. And it's my first fund product I'm running. So it's a steep learning curve for me on a daily basis.
Well, that's actually an interesting part because it's what I was thinking about. I was thinking about some amounts in my head, and 2%, I can see you make that happen. If it's 1% though, eh, I mean, again, you're gonna have expenses, and if you're running just throwing out numbers out there just for the sake of the numbers, but if you're running 10 million bucks, which already wouldn't make you the smallest as you said in Europe, that's 100 grand a year in terms of cost. Can you do enough decent due diligence, go to all the conferences, talk to all the people, go to all the sites for 100 grand a year?
Yeah, I don't travel first class. Let's be honest. So that cuts expenses down quite a bit. And it doesn't mean I'll be attending every single conference that's out there, right? So we'll be strategic about it. There's some really good ones like the Beaver Creek conference. There's quite a few in Zurich where a lot of companies come out, maybe a day in London. And then we host our own event where a lot of companies come to. Doesn't mean that the companies that are attending our conference will be prime investment targets. I really want to make that distinction clear, that there's no association. And I don't want any company ever to feel obligated to attend our conference because they're either in the fund or want to be considered. There's a clear line. Like I want to have that really made clear that I'm not going to use the fund as leverage to leverage the PR services here. That's really, really important to me. And I want people and investors and the companies in particular to understand that.
Yeah, so there's indeed Beaver Creek and everything else that goes on over the pond. I hear there's some kind of a conference in Frankfurt, but I don't know if that one is worth going to.
It might. Get it to my own horn a little bit. Don't you go
against it? You're not gonna stop that, right? I mean, you're not planning on. Okay.
No, it actually is like the fund actually really fits well the SOAR financial ecosystem. I'm a part owner of the fund, so I'm not alone here. But it really fits in. We have SOAR financially, the YouTube channel. We do have the conference, the PR site, and now on top of it, the fund. I think it's really complementary to it all. Like the whole ecosystem fits really well together because we can market the fund through the other parts of the ecosystem. We're in constant contact with companies, but also investors on a regular basis. So it really, really fits well into it. I think it's the natural evolution of what I've been doing the last 15 years. Fortunately, Manuel reached out and asked, and it's just like, yes, this makes a lot of sense. And there are two ways where how you can evolve personally. Like that's what I was looking at the last, let's say, 18 months. Like either you become the CEO of a mining company, or you maybe invest if you want to get out of the IR side, right? So there's not too many options if you look at it.
Are you going to be starting one fund, or is it multiple funds? Like some companies have a copper fund or base metal fund and a gold fund, for example.
It's going to be one. It's going to be UCITS compliant, just a resource fund. Can't mention the name yet. The compliance department told me not to put it out yet, which honestly, somebody has to explain to me why. Yeah, we're calling it the resource fund right now. But focus is going to be gold, silver, copper, mostly the precious metals, of course. Internally, we decide we will take a look at lithium and uranium, but it's a very bottom of the list. It's got to be an exceptional opportunity for us to include that. Maybe a Cameco or so. And I don't think I'm saying anything out of line here. Might be maybe the only uranium company I'd be willing to consider. But it depends on when we really start buying those positions. What's the price level and things like that? So no, short answer is one product for now, and then we'll see what the appetite is, what we can stomach as well internally.
Is there a specific strategy in terms of? I think you mentioned it's not going to be majors mostly because you don't have the direct ties and you don't have the edge maybe there, but is there a focus on discovery? Is there a focus on development or building projects from the ground up? Is there a focus on maybe following certain people, or is none of it all that matters? I mean, is it a mix of everything?
I think it's a mix of everything, quite honestly, because my personal investment style is going to be represented in there as well. I'm a long-term investor, like buy and hold kind of strategy. Of course, situations change, so there might be some trading, but ideally, when we buy something, we hold it for a while. Maybe even do another financing into it, or how do I like? It's the first time I'm doing an interview talking about this, so I'm stuttering a little bit, and I appreciate you grilling me on it because it helps me sort through my thoughts. But the idea is really long-term holdings. There can be opportunities that we play the discovery side. Maybe we like a team, we like a certain area, and say, hey, let's go in even on a private basis. I think the fund allows that, as far as I know, and compliance will always have to check that part, that we can hold a couple private positions as well. That could be interesting. And we will do private placements. So we can hold warrants in the fund. So we're a bit more flexible than some other products potentially out there, because that's what we think is the USP. We do have that access to those products, investment products, that others might not have, and the expertise to get on the president's list potentially, or get just announcing actually that we launched the asset management firm. I think 3 sales desks out of Toronto reached out immediately. Surprise, surprise, of course. But to answer your question, I think it's all of the above, Luke. It will be management team focused, cycle focused. I do like growth stories right now, development and growth stories personally. That's what's doing best in my portfolio, but doesn't mean I'm excluding junior grassroots exploration.
It's interesting you said uranium and lithium. I guess you should only do those when you have capital gains so that you can offset some of it with
exactly.
What is you're mentioning you like development stories and this and that, and how are you going to approach the strategy as a whole though? Is it kind of a bottom up or a top down strategy? As in, do you start at the economy level, you like a metal, and then you go down the quality trail or the stage trail, if you will? Or do you go looking for geology in the first place? Because as far as I understand it, none of you are geologists. So yeah, how do you manage the strategy?
Bottom up. I really start with the people, capital structure, location, and then next level is geology. Once we've built a bit of a foundation here for the fund as well, we will have consulting geologists join us so we can get a little more adventurous. Quite honestly, that's it's been on the roadmap, but you got to be able to pay them as well. So we're a bit in startup mode. It's actually fun. Everybody like Manuel and I, we're both doing everything here. Setting up furniture at the office in Prüm, and we're doing everything ourselves. So we will rely like on the geology side more from the expertise of the companies. Sounds a bit naive, quite honestly, but like I've been doing this for 15 years. So the gut check it works really well. And if we struggle or we see something that we don't like, we know who to call and get an independent assessment to a degree. We won't be authoring our own 43101 reports. We won't be doing any resource calculations in-house. As you said, we're lacking that expertise, quite honestly, and happy to admit that. But the people, that's where it's at. Can people raise money? Even in a weak market. And I think we're still in a weaker market, quite honestly, for the junior exploration companies. If you look at the funds and the orienting data that we haven't even reached 100 yet. I think last week we reached an index score of 42, way below the benchmark of 100. So there's some room and some opportunity. And it's, hope that answers the question.
I know a geologist. He's a ginger too, and he's based in Germany as well. He told me he works for free, so you can call him up anytime. I'll give you his number.
I might.
With the you're mentioning benchmark, which is an interesting thing as well that I find. I look at some of the other resource funds that are out there, and I look at the benchmarks that they take, and you're kind of free to do whatever you want. But what do you take as a benchmark? The GDXJ, it's not really juniors in the way we know it in junior mining talks, or the TSXV is not only mining. What do you measure up against?
It's a good question. We haven't decided that internally, quite honestly. It's because we're 50% going to be major and royalty companies, major producers, royalty companies easily. So it's tough because we will have that junior exposure as well, hopefully for some torque into the market that we're in right now. I think you can use just any of them, quite honestly. It'll be a bit unfair. Certain weightings will be different than the GDX, GDXJ or so. I just wanted maybe S&P 500, DAX, performance, inflation. It's a terrible benchmark to use, but probably GDX, GDXJ, quite honestly. That's what we will have to fight against. And if you can't have that torque in the portfolio or outperform the GDX or GDXJ with a junior torque in it, we might be doing something wrong. I'm being a bit harsh, but I know benchmarks put me in the spotlight, and we have to be accountable here. So, but I'm not going to chase performance, if that makes sense. Meaning doing risky plays, doing only early stage stuff to have that performance. I'm not going to do that. Not willing to sacrifice it. I know it's dangerous because I know what the other funds are doing and how vocal they are sometimes about performance online. I want to stay away from that. I hope I'll let you guys be the judge of what we do. And even if we underperform, I want to deliver a product that I can wake up every morning and to be quite happy about, right? Even if we underperform the GDX by 3%, whatever it is, I know we've put out a solid product. I think that's first and foremost. That's most important to me. And if we happen to be the best performing mining fund or resource fund out there, I'll take it.
Yeah, I think investing in general is super interesting because even a 95-year-old Warren Buffett can outperform people with maybe in some people's minds an outdated way of investing. And I think strategy is everything. And one strategy could be holding a lot of cash. I think is always smart because, for several reasons. Let's not go into it right now. But are you allowed to do all those strategies? Because some funds have rules, right? And I've heard people talk about we are not allowed to keep more than this amount percentage of in cash, or we are not allowed to have more than 10% in one position. So what are your limitations in the fund?
Yeah, there will be limitations, quite honestly. So on the junior side, there needs to be a certain amount of liquidity, but we can have some illiquid positions in there. It'll be a daily, I'm not sure what the English word is here, it'll be daily calculated the fund. It's a UCITS fund, so you can redeem on a daily basis, but you can also buy on a daily basis. We do want to have a certain percent of cash. I have top of my head, I think it's 7 or 8%, it might be 5. I have to double check that one. Just to have that liquidity on hand in case somebody wants to sell, so we don't come under pressure of having to sell out of certain positions too early or so, right? There will be limitations, just like everybody else has. But since we're setting it up as a UCITS fund and with the focus of investing partially into juniors, it's not going to be as harsh when it comes to those restrictions, but they're going to be there, just like every other fund. So we're not going to be the exemption, and we'll be freewheeling or free dealing here.
But are you allowed to have, for example, 20% cash in times where you feel like it's not the time to be invested, or are you required to be in the market?
I have to double check, quite honestly. I haven't heard about it that we're restricted in that regard, that there's a maximum limit. Because in the end, the investor wants its money back, we can provide it. But also, we're a long only fund, so we have to be invested. I actually have to check. It's a good question. I don't have an answer for you, Luke. But it hasn't come up that there's a maximum in terms of cash. Let me write that down. I'll get back to you on that.
Yeah, I think it's not all the funds have it, but some funds have that, and I think it's a bit of a restriction because there may actually be times you don't want to be 90% in juniors. So that's why
Oh,
I'm
absolutely.
asking, like, if that's possible. I mean, at some point in time, it may come in useful. And the other thing is the 10% rule. I mean, if you would like a company a lot that you put, let's just say 6-7% into one position, and that stock doubles, are you required to sell? I mean, do you have to keep it below 10 in that case, or is that not required?
We will be. We will
Hmm.
be in that regard. It probably is it will be on a case by case basis as well. It depends a little bit on the liquidity of the stock, and quite honestly, the harshness of the compliance department of the bank we're working with. That's a new relationship for me, so I'm not really sure how they will act in that regard. Yes, it'll set off some warning bells internally, and I'm pretty sure the compliance will call. But that's a relationship we need to sort of establish, and I need to learn about, quite honestly. There could be exceptions, but I'm assuming they will call us and say, hey, you got to reduce some of the exposure here a little bit.
Hmm. You said you can redeem daily, so there's no lockup. How do you pull that off with no lockup? Because you said long term, like you want to bet on these things long term, but it's a very emotional sector when people tend to buy the news and sell the news and buy the rumor and sell the rumor. There's always just stuff happening with a lot of volatility. So if you don't have that 10-year lockup, but how do you deal with that? Like how do you not blow your brains out, I guess, on a volatile day?
Well, funds aren't as volatile as stocks. People invest into a fund, oftentimes buy it and just hold it and leave it. So it's not daily traded. You don't daily trade funds, right? Or ETFs, so like unless it's the gold ETF or so, you don't really daily trade those. Those are really investment products that you buy and hold. You're buying a fund for the long-term performance. Because even what's the performance going to be daily trading a junior resource fund? We'll have 20, 30, maybe 40 titles in there. If we're up 2%, you're not going to trade that because the margins will be eaten by fee. Will just be eaten by fee. So I think I can debunk that a little bit, but I know where you're coming from. That volatility, especially when it comes to 4-month hold warrants to a degree. That's a discussion we're having with the compliance department. How do you value warrants on the balance sheet if somebody sells, or we're doing a financing, we get warrants, then somebody sells within that holding period, or while we haven't exercised? Those are questions we're actually still going through with the compliance department. They have approved it that we can hold warrants, but I actually don't know on the technical side what we're going to do with somebody who leaves before the warrants have been exercised during that period that the investor bought. Right? Let's assume on January 1st, we acquire, I don't know, $100,000 of XYZ resources. We get a full warrant. We carry it on the balance sheet. It's on there. It's usually valued at zero until you exercise it. And then, but the investor sells, let's say April 1st or March 1st to make it easier. Right? That again, for me, it's a huge learning curve on how we're going to do this. And as far as I know, the money stays in the fund. That's a loss of the investor at this point. If he sells early before we've exercised the warrants, because you only exercise warrants once they're in the money anyway. So they won't be transferable out of the fund.
Right. Okay, that makes sense. I think that depending on where you're based, that's also just generally how it happens. If you look at some of the other European funds, and that's actually reminding me of thinking or asking about how is this different from, say, a David Finch, Ixius, Harley Lundine's Bromo, or even something like the Commodity Discovery Fund or a Crescat or whatever else we may have here. How are you going to differentiate this fund? How are you going to get an edge, if that's even an aspiration here?
I think dynamicism and activity itself, personality to a degree, makes that difference, and just trust. Doesn't mean they're untrustworthy. I love David. I love what the Commodity Discovery Fund is doing, right? All good. But I think it comes down to people and just a lack of product in general. I don't think we're even really competing in that regard when it comes to that. Because people in Germany or even in Belgium, that's one of the target markets for us, don't have access to all these products. Like the Crass cats are not really investable over here unless you buy them internationally, right? So, and the German fund won't be investable outside from the US, for example. So there are restrictions. It's kind of tough to cross border compare, but there is a lack of product in our space, quality product. And even if we were the sixth mining resource fund, that's the sixth. It's not the 600th, right? So we're not trying to be the 600th dividend fund or so, dividend chasing fund. We're the sixth or fifth mining fund or mining resource fund. So I think that's by itself is already a level of separation from everything else.
Is there a minimum investment size for any investor?
The fund itself is a UCITS fund, so you can invest. Actually, you can have a daily plan if you wanted to. On the product side, on the asset management side, yes, there will be limits. 25,000, 100, and 500,000. We're just in the process of setting this up. We will be offering a couple other products on top of what you're seeing on the website right now. Right now, it just mentions individual asset management, but we're in the process of setting up and going through compliance. That's why I can't really mention the names yet. It's a different story, compliance. It's an interesting topic, but we're in the process of setting up 3 more products. I can't mention the names yet. I can't really mention the strategies yet, but they will be geared towards what the core of the business is. And I think you can guess it's going to be resources and mining.
Okay, and how are you going to report to your investors? Are you going to write a monthly report, or is there any other way you can be in contact with them?
So social media is one thing, but as you said, we definitely want to write a report on a monthly basis. My goal is to discuss mining news, what's been going on in the space once the fund is up and running, what have the companies reported on it. It won't be long or anything. I'm stealing the idea a little bit from Matt Geiger, MJG Capital out of the US. Phenomenal newsletter. I think he does it quarterly. I cannot replicate what he does on a monthly basis here, but that's sort of where I get the idea. He's super transparent in what he's doing and his position on the companies. I won't be providing research on the companies, but I want to have some thoughts about it. And we will be available regularly on webinars, Zoom calls, email, X, easy to reach. And the whole point is that you have confidence in working with us, and that means you have to be reachable. And you probably saw the newsletter symbol on the website. We do want to put out a regular product that the investors can follow along, and especially on the junior end, that they can understand, hey, this is a drill result. What do we make of that result? I think I want to include, and we haven't finalized the template or any design yet, and we have yet to draft the first edition of it. But once we're up and running, I do want to have like a personal note, like, hey, I thought this was positive. Hey, maybe this wasn't as positive as we thought, and we might reevaluate or stay invested for now, but we'll watch very closely. Maybe the drill program on this side, for example, if it's not planning out, we might be leaving, or I don't know. We haven't decided on that, but I do want to be transparent through that newsletter.
I think you should set up a live camera in the office and just broadcast everything 24/7.
Well, we were talking about how messy my desk is, so I'm not sure that's a good idea, to be honest.
How do you can tell me about how you manage your desk, but you can also tell me about how you manage risk here in a sector where, again, failure is the norm. It should be the expectation. So when you think about risk, do you manage it in terms of position sizing? Do you manage it in terms of your exposure to each stage of the Lassonde curve? How do you even begin to think about risk?
That's a very good question. It's a difficult one to answer because everybody's got a different risk profile, right? And what they're willing to do. I'm a little more risk. What do you call it? Not averse. The opposite. I like risk to a degree. I do like the explorers, the discovery plays personally, and that's my personal investment style. But it really is the mix of how we approach the fund and how we plan to set up the fund. It's a bit of a pyramid where at the bottom you have the majors, you have the Barricks, the Newmonds, the Agnico Eagles, you have the royalty companies, so that at least 50% is on stable footing. And then we start talking about the growth stories and the developers, the mid-tier producers in a let's say 1 to 10 billion market cap range, and then the juniors below. That's sort of the first risk mitigator, is really having a bit of balance. Yes, we won't be participating in a complete rally to the upside. So maybe we will be underperforming the GDXJ a little bit. Not the GDX, but the GDXJ potentially a little bit when it comes to that. But I think it's from a risk management basis, the more solid footing. And then maybe we get lucky on the junior side, and we do have the odd 10 bagger in there. But it really, I don't want to finance a 2 million Canadian dollar project with grassroots exploration in Alaska. I don't think that's too much risk, unless it's I don't know, it's name any name you like and trust in the resource space, and you happily follow. Or we get access to some family and friends rounds pre-IPO or so. That's a bit different. But that's a case by case basis. So we're trying to manage risk as much as we can. We're not going to be all in the 10 million market cap junior range. It is by position sizing, as you said as well. The 10 million market cap company will never be 10% of the fund, right?
There's this Dutch guy. His name is, I forget, I think Luke or something like that. If he starts a company, I'd go all in with the entire fund.
For example.
How do you go out though? How do you exit a position without crashing the stock price? Oftentimes in these juniors, they're small even for small positions. But if you're running a fund that is that large and you want to have a substantial position that gives you enough upside if something material happens, it's probably already too large to kind of exit at once. So what's kind of the selling strategy here?
I've learned from the PR side, and one thing I hope I'll do it personally is you actually call the company. You tell them, hey, I got, I don't know, 100,000 shares of your company I need to get rid of because I got some redemptions or whatever it is, or I don't like what you guys are doing anymore. Profile change, doesn't really matter. But I hope I'll do it, that I'll actually call the company and give them, hey, I'll start selling in 5 days. If you want, you can help me place that block. I'm not sure I'll be able to give you a discount personally on that position. But if I don't, if you don't find somebody, I'll tell you, I'll slowly start selling into the market. Of course, like my goal is never to hurt anybody. But from the fund side, you might have to sell maybe even more aggressively than you want to. We've seen it during the downturn in the last 2-3 years. A couple funds had to close and they just sold relentlessly because the fund manager just left. They didn't care, the institution. I don't want to be that guy. So I do hope that I'll be the guy who actually calls the companies, because I've heard it too many times. Like, oh, we don't know who's selling. We don't know who's doing this. And no, they never approached us. I think that's the worst you can do. It's a small industry. I don't think it'll be reputational damage if I don't call, but I think it's just courtesy. Like we're all playing in the same pool, right? And it just makes sense.
Well, if you call them and you tell them that you didn't like their presentation or that you think they're spending too much money on conferences, there might be reputational damage, as in they might not want to talk to you anymore. It's happened to me, so that's why I'm saying it.
That I'm happy to deal with that, because I'm not sure that I want to work with that person in another capacity anyway, if they cannot separate that, right? So, because it's two different, very, very different things. Right. One is managing other people's money, and two is running a conference business or a PR business or something. If people cannot, if the story is complete dog shit, of course, afterwards, I don't necessarily want them as a client. But if the profile changes, or they become a producer that we don't want to be involved in or something, or we don't like the debt financing they've done, that has nothing to do with the PR side. It's still probably a decent company. It just doesn't fit the profile anymore. And I hope that the companies do understand that. The industry is very ego driven. There are a lot of big egos in this industry, so I'm not betting on it, but I hope I appeal into what do you call it? The brains, perhaps, and maybe just, I don't know. I'm not even sure that makes any sense.
Well, you might want to switch sectors if you're trying to appeal to the brains, because you look at me and that already probably tells you enough about the sector. But with what I'm thinking here is, I think we've grilled you enough on the fund itself. I kind of want to talk more about what kind of companies you're going to be picking and how you're going to do them. Is there maybe like a case study type of thing that you can walk us through, where you had a company that you liked? You picked it. It did well for you. Why did you pick it? How are you going to replicate that in the fund?
Excellent example. It's still in my portfolio, so I'm still biased. It's Montage Gold. I liked it from day one. That I got to meet the guys. Like, I wasn't the first investor. I wasn't there when it was spun out from Orca. It was private for a while, and then it came public. I think I bought my position at 69, 70 cents, roughly like that. When they announced the financing, the stock actually dipped when they announced the financing. They were a PR client. So I did have good connection with the management team. I got to spend time with Rick Clark and the rest of the team. I actually did a site visit down to Cote d'Ivoire, and I was like, okay, this is happening. This is a mine that will get built. And of course, we got lucky, and the Lundins came in. They've added phenomenal management team. Martino, I've actually known longer than I've known Montage, which is great because I've known him from Endeavor Mining days. That's a perfect case study, like where you see it. Okay, there's an explorer. It's already got an established resource base. Where is this going? Will this actually happen? A site visit confirmed that. Again, I'm not a geologist, but we could just walk around, go. I think they named it G2 now, or GB2 now, to save me from saying that. But you could just see on the site visit, this will be a mine. It will happen. Where they planned, like, They showed me around. Hey, this is where we'll put the production facilities. This is where we're going to have the plant. And he's like, yeah, there's no problem. You won't have to move any houses. You won't have to do anything like that. And I think that's the perfect case study. And you just buy and hold. I still hold my core position. I haven't even traded around the position, which I probably should have when it dipped to 52 cents. Still kicking myself for a little bit because I've been telling others to buy. But I didn't add to my position. But now we're trading at 390 as of yesterday, up from 70 cents. So that's the perfect case study for that, where a site visit confirmed what I knew. Got a bit lucky by that management change, but I trusted Rick Clark from the beginning to do the right thing here. And Hugh, forget his last name. Hugh was the sort of the CEO or COO on the ground in Cote d'Ivoire. He's actually the guy who founded it, who found the deposit as well. So I was really comfortable. And those are sort of the stories. If I find more of those, I'd be happy to jam pack the fund with those kind of stories.
You bring up a good point that when you talk about Cote d'Ivoire, because I was thinking about, are you going to be jurisdiction agnostic? Will you go anywhere, or do you want to kind of go niche on, I don't know, Africa, for example, because it's a similar time zone or something like that?
No, I'm going to give you the generic answer, which probably everybody gives when they talk about jurisdictions. I won't go to Venezuela. I won't go to Bolivia potentially, but there are other jurisdictions. I'm not agnostic. I'm agnostic, quite honestly. Gold. Where can you find good gold, silver, copper deposits right now? That's where we'd go probably. Maybe the Congo. Let's see what the U.S. does in the Congo. Maybe in 2 years' time, the Congo is going to be the best place to invest in. Maybe be a bit early right now, but maybe in 12 months' time, once the security deal is done and M23 has been pushed back, maybe the Congo is the best place to invest because it's still underexplored. So I'm going to keep my options open a little bit when it comes to the answer here. But of course, I don't want to expose my investors to certain risk. I personally shied away from an investment of a company down in Sudan just because of country risk, and I did the right. It was the right decision because the second they announced the placement, and I was willing to hit send on an email that I'd participate in a private placement, the coup happened. And I've only would have done the private placement due to personal connections. It was a private personal investment from my PA. But the country risk was just too much. And in the fund, I'll be paying way more attention to that than in my personal account.
Well, if I were to be a little bit biased here, I'd just say West Africa and Central Asia. But there's a time and place for that as well. What is it? Maybe you can give me an example, by the way, of a time where it didn't go as planned and you kind of wanted to exit and you had to, you're touching upon it there, but we talked about how are you going to be selling positions. You said, something changes fundamentally. I call the company up and make that happen. Give me an example of where something didn't play out and what did you learn from it that you're now going to use for the fund?
Don't invest into friends' companies. They're usually perform poorly. And don't be too loyal to a stock either. From the PR side, I'm usually really loyal to my clients. I hardly exercise options, and I try not to sell positions of companies that we're actively involved with. Not because I have insider information to the contrary. It's just I'm loyal. Like I try not to hurt my client by selling or anything like that. That'll go out the window the second I start managing the fund, right? So the fund won't know any friends or enemies in that regard. And I really hope I can emotionally, personally can, what do you call that? Separate that as well. But I won't be chasing friends anymore. Like I've a lot of my dead companies in my portfolio personally, or not a lot, I'm exaggerating, but one in particular is sitting at a 99% loss in my portfolio, right? That I wrote all the way down. I should have sold earlier. I actually should have sold right after the site visit because I knew it was like, ooh, this is too small. It might not make sense. But I didn't think about it too much because the guy running it was a friend of mine. And but for the fund, that will be definitely different. Trust me.
Luke, did you hear that? I'm not giving you any money.
No. I think it makes sense because you have to be objective, and sometimes a friend, or a good connection helps. But the loyalty thing is a problem because I also held stock for loyalty reasons or because people helped you before and you don't want to really hurt them. So, I mean, people are not that good to you. Well, some people are, but you have to be. When it comes to investments, you have to just make the right decision, I guess. And that's. I think it's good that you say that because it's a crucial one if you manage other people's money.
Yeah. No, it's like I've learned my lessons the hard way, sadly, when it comes to like loyalty, because the companies at the end don't care about you, right? They really don't. They'll do their own thing unless you're like a 25% shareholder or you have a board seat or so. You're not really actively involved anyway, so you're always at the losing end when it comes to decision making. and you're like from the PR side, you're the first one to get cut anyway, and then all the loyalty that you've shown them doesn't really matter,
Hmm.
In
right?
terms of investing, in jurisdiction, you said we don't mind unless, of course, maybe Sudan or countries that are too risky. But from a exchange point of view, are you planning to invest only in the Canadian markets, or are you planning to invest in Australian markets as well?
So we have the option to do ASX as well. But that's personal, as I don't know enough about the ASX, meaning I don't have a good network established on there. Of course, we'll probably have a couple exploration companies in there, but it's not a big focus for now. It's going to be heavily Canada centric, due to experience and expertise. Doesn't mean I won't be going down to Australia and attend the odd conference here and there. It's one of my goals, actually, but it's also time constraint. I hate waking up at 3 a.m. to check press releases, to react to anything. So it's always been I always left it aside because it's a capacity thing as well. If there's the odd story, that's something I can happily and hold, and I don't have to worry about a press release completely changing course of the company overnight. I'd be willing to enter those positions as well. But to answer your question, it's probably going to be 90% Canadian stocks for now.
Is it you who decides, or is it Manuel, or both? I mean, is either of you in a position to decide on buying or selling something, or do you always have to sign off, both of you?
We both have veto power. We'll see how that plays out in reality. And at first we'll populate the fund together, and then it really depends. Honestly, I don't know yet how that's going to look like on a day to day. But we'll populate the fund together. We'll have a bit of a model portfolio already of stocks that we want to put in there, and then we'll buy those together, and then we'll see managing the fund. It'll be mostly me. My title is going to be principal and portfolio manager, because I'm the one who's also doing all the traveling. Manuel doesn't travel as much personally. That might change. We'll see how it goes. But for now, I'll be myself. So I'll be sending in ideas. But he also has phenomenal network into Canada, to the brokers, the sales desks. So we'll be making those decisions in the end together. And I've got to justify it to him as well, what I'm buying. So it's always a good case. Even if I get to make the decision, I'll have to sell it to him. I wouldn't say to approve it necessarily, but to run him through my thesis and idea.
But you said don't invest with friends, which means that I shouldn't buy your fund then in that case. I think
Better not.
you lost
Better
me
not.
there. You lost me there.
No, but that's a publicly. It's a different story. I appreciate any support, of course, but the benchmark is going to be the benchmark, right? And you can track the performance easily.
Yeah.
And since you can sell it and buy it daily, please make use of that.
Yeah. Good. Well, Clive, we'll let you do your thing here. I think I've been through most of these questions to get a better understanding of what's really going on. Again, the German gold show, the Deutsche Goldmesse, is coming up, in about a month. Whoa, who are you expecting to have, and how many companies you want to have there now?
Yeah, we'll have about 25 companies present. First Majestic, Equinox, just to name a couple bigger ones, of course, but there are smaller companies coming as well. It's a really good range. We'll even have a tungsten producer, Almonte, is coming, for example. So that's an interesting one. And 6 keynotes, fantastic, panel that you'll be on as well, Antonio. But 6 keynotes: Francis Hunt, Lobo Tigre, Dominic Frisby, Florian Grummes, Kwasi Ampofo from Bloomberg NEF, more from the critical minerals side. So we're not just gold exclusive, and we're expecting about 250 investors over the 2 days. So it's going to be a really good mix, good investor to company ratio. It's a nice boutique event that's always fun to attend, in my opinion. And we've really built a nice community of people that you'll just see as well. Like, they happily come out twice a year, and just to exchange ideas with other investors as well. So the networking aspect is huge to us.
Yeah. There's still free food.
There's still free food.
I'm coming in. That's it. No, I've been through everything. Luke, you got anything else?
No.
Yeah.
I'm done.
Awesome. Well, thank you so much for doing this, Guy. I really appreciate your time.
Really appreciate you having me on. I appreciate it. It was the first time I've been running through this publicly, so it's that's why I was stuttering a little bit. And let me get back to you on the cash max level side. I'm curious what the answer to that is. I'll text you guys.
Got it. And then hopefully over time, I mean, when you do these monthly updates or whatever, we can have conversations, talk about some of the specific companies, like we would with Matt Geiger. So yeah, appreciate your time. Thank you so much.
Thanks so much.
And thank you to everyone for listening and watching. This was an interesting conversation. Any and all questions for future interviews are, of course, welcome. Please post them in the comments. But I am still going to kind of repeat the warning that I said at the beginning, that everything combined with the warning that I gave you at the beginning is to say that you should treat this program as biased entertainment instead of unbiased journalism, because there will always be some type of bias in what everyone tells you online. They may own shares of the company, they may be a director, they may have been paid by the company, and so on and so forth. Now, this entertainment program specifically is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business. Losing money is the norm and should be the expectation, as this is a very complex sector, and the performance of individual companies typically depends on many different things, including geopolitics, macroeconomics, commodity prices, and many other moving particles that are typically outside of anybody's control, and no one can really proceed him, because unfortunately, and believe me, I have tried and I might even keep trying, though I doubt I'll ever be successful. I just don't possess any superior knowledge about the potential direction of any stock or commodity price. And at least to my understanding, nobody out there does. So you should not rely on this program for directional advice or advice of any sorts, as this was a conversation that was general and impersonal in nature between a couple of individuals, none of whom are your licensed financial advisor and none of whom can see the future. So no guarantees can be made about future events, and past performance is not a guarantee of future results. So please talk to a professional licensed investment advisor with a good long-term track record, as well as do more research before taking any decisions by visiting setterplus.com, where you'll find the official filings of the companies that might have been discussed in here today. And if you don't do that, you're highly likely to lose your money. There's a couple of documents that are absolutely obligatory reading for people interested in the space. And that is, of course, the MD&A, which is the Management Discussion and Analysis. And it's an official document that the company publishes on setterplus.ca. You want to look at the financial statements of any company and understand how and why and where they spend money. And you also want to look at the Management Information Circular, which is going to tell you how much money each insider of a company earns in total compensation, bonuses, and everything, and all the other incentives that they might have. It's also going to show you if there are any change of control fees and whatnot. It's a very important document. And then, of course, this is a technically focused business. So you also want to read the NI 43-101 technical disclosure. And again, if you don't understand it, consult with someone who does understand these things. Because if you don't do that, you are highly likely to lose your money. So yes, thank you so much for listening to this. And I'll leave you with one of my favorite Charlie Munger quotes, which was, if you don't understand it, don't do it.